it is going to be challenging for future generations to continue buying ground when we're looking at prices that we are today. We've seen a lot of good Class A ground sell for $20,000 plus an acre. There still are some opportunities out there to buy ground for a more reasonable price. Programs with the FSA, and I know you and Jackie have talked about that a little bit before. There's some opportunities there, and that's all good, but it is challenging.
When you're getting ready to make a land purchase, financing is by far one of the most intimidating parts of the process. In today's episode, we're meeting with Garrett Feik, who's a financial officer with Compeer Financial, and we're going to give you the information you need to put yourself in a ready position to make that purchase, talk about some creative ways to come up with down payment money, and learn a lot more about what it takes to come up with the dollars to actually become a landowner. Welcome to Land Your Ground. Episode 14 of the Land Your Ground podcast, and this morning we have special guest in studio. We have Garrett Feik, who's a financial officer with Compeer Financial and a good friend of mine. This guy sitting next to me is somebody that I go way back with, probably further back than anybody else we've had in studio with the exception of Jackie. So have a lot of respect and admiration for this guy. I love what he's doing now. And I'm excited to get to have him in to help educate some of our guests about finances and about getting them a little bit closer to land ownership. So welcome to the studio. Thanks for joining us here, Garrett.
All right. Yeah. Thanks, Chase. I appreciate you having me on here. I'm looking forward to it. Been able to listen to a few of your podcasts since you guys have started, and I like what you had to say so far.
Yeah. Well, you've known me long enough to know what I have to say, so I'm encouraged by the fact that you still listen to it.
Oh yeah. I know you're putting out a lot of good information for people, so I think it's a great resource and it's good to see. So
well,
glad to be on.
You and I both know since you were really young and since I was a little bit younger, that land ownership was just like huge goal of ours. It's huge goal of yours. I mean, we both love to be outdoors, and it's just, tell us a little bit about yourself and what it is, what your connection to land is, and what makes you want to work in the field you're in now.
Yeah, so I grew up here in Mercer County, West Central Illinois, and spent a lot of time with my dad hunting and fishing growing up. We've been fortunate to have several farms that we've hunted for a lot of years, pretty much my whole life, and we don't own anything ourselves currently. Hope to change that at some point, but we've been able to take some farms and kind of feel that sense of ownership in them, even though we haven't, we don't actually own them. We just got some good friends that are very generous and allow us to use those farms and do a lot of hunting out there. So that's always been my big passion is the hunting, fishing, anything outdoors. Had a lot of buddies growing up who farmed and started helping out their families with their farming operations. Really enjoyed that part of what this area has to offer.
Mostly row crop stuff or a little livestock?
Row crop and livestock.
Yeah.
So, a little bit of both there. And so that encouraged me and pushed me to go ahead and focus on an ag career. And I decided to go to Western Illinois University, got a ag business degree and a minor in agronomy. That took me to working for a seed company and just really enjoy working with producers, farmers in these rural communities. And eventually, a few years ago, it landed me right back in my hometown. And I've,
we were glad to have you back.
Oh, it's good to be back. Yeah, because my last job, it kind of took me around the country a little bit. Spent some time in North Dakota and other parts of Illinois and Iowa. So to be able to come
your
back.
Experience a lot, though.
Oh yeah, no, it was a fantastic experience. Really, really enjoyed it. Got to meet a lot of wonderful people, and all these rural areas across the whole country. There's a lot of similarities. Even though you might be 500 miles away, people are pretty similar. What they do is pretty similar, and
right. Their values and their connection to the land is all.
That's right. And especially when you're working with people who are involved in agriculture, just solid people, salt of the earth, and I wouldn't want to work with any other group of people. So like you mentioned earlier, I'm now a financial officer with Compeer Financial, and I work right in my hometown in Aledo, Illinois. So I feel very fortunate. Awesome. Yeah, love it.
Yeah, and like I said, we're very, very glad to have you and your wife Caitlin back in this area and just part of the local community. But I love that it's kind of come full circle, because there was a day that we used to work side by side swinging chainsaws and planting trees and doing a lot of that land stewardship type work, and now there's been plenty of times here in the last couple of years where we get to work together again, because you're helping people queue up their finances for buying, and I'm helping them find the right farm or whatever. We're being on the selling side a little bit, but I don't know. It's just really cool. So
It is. Yeah, it's offered up a pretty unique opportunity to be able to work together again. If we rewind the clock 10 years and we think of, the projects we were working on back then, kind of what we were potentially planning or maybe moving towards, and we had all these dreams, maybe some things we could do.
Mm-hmm.
Would have never thought that we'd be working together at this capacity now. As I'm a financial officer, and you're selling farms, and just to have the ability to continue to work together after all these years on a professional level, it's pretty special to me. I really enjoy it. It's been a lot of fun.
You're making me blush. I'm getting all excited about it. So let's talk a little bit. So you talked a little bit about your background and kind of led on that you're a hunter. You're a little bit more than I just like to hunt and fish type of guy. You're pretty serious about it. Your old man was somebody who I deeply admired. That guy could get after some deer with a trad bow like nobody else I've ever met. So it's and I could tell a lot more stories about that. But from the time you were pretty young, you were slinging arrows in the backyard on a pretty regular basis, and now you're a pretty serious bow hunter, aren't you?
Oh yeah. So bow hunting that's my number one passion. Love chasing deer. Dad, like I said, he had me out in the backyard when I was 2 or 3 years old, shooting little self bows that he had hand built. Mm-hmm. And that's just, it's never stopped. I was out, shot my bow yesterday. It's pretty much a daily thing for me.
Yeah.
This isn't just a couple weekends out of the year. This is something I'm passionate about. I'm doing something related to hunting, fishing, outdoors pretty much every day.
Yeah.
All year round.
Yep. And you travel a little bit. You got some trips lined up yet this year, don't you?
Yeah, no, do a little bit of traveling. So here in Illinois, I even like to travel around with the turkey hunting. So started off in McDonough County, and then I went to Mercer, and then in a couple weeks I'll be down in Calhoun County. So I'll be hunting turkeys in 3 different counties within Illinois, and some pretty varied landscapes from especially here to Calhoun. Mm-hmm. And then coming up in the second week of May, my dad and I were going to go out to the Black Hills in South Dakota, chase Miriam's turkeys out there. I've been out there before a couple years. The last trip was in 2019, so it'll be good to get back after 5 years.
Yeah.
And then later this fall, Dad and I were going to make another trip out west, a little bit further to Idaho, and we're going to hunt elk. We're going to be out there for the season opener on August 30th. It's going to be a drop camp hunt.
Nice.
So they're going to pack us in on horses, take all our gear and food, and get us back up in the mountains, and
that's
they're
going
to
to
leave us. Yeah, leave us there for 6 days, and we won't see them again until you're ready to head back down the mountain, or unless we get one, and they'll help us pack it out.
Yeah. So do you use satellite phones or something when you're on?
Yeah, we'll use
remote?
It's Garmin inReach.
Okay.
So that's the best way to communicate with the outfitters.
Yeah, so you can holler at them when you get one down and
Yep,
say.
if we get one down, we can send them a message and share our approximate location, and they'll be able to come up there with the pack horses and help us get it down off the mountain.
That's awesome.
Yeah, so
That's
really
some serious
looking forward
adventuring.
to that. Yeah.
Fun stuff. So, so your connection to land is not just like, oh, I've had this family farm that I kind of grew up on, or that there's one specific piece. I've always admired how you and your dad have taken on just like a stewardship mentality about farms that you guys, like you said, didn't own, that were permission access, farms that somebody owned that you kind of, built a relationship with, and you take really good care of them, and you treat that farm and that landowner with really high level of respect, and that has led to like you guys having continued access on a couple of the same farms for a long, long time, right? Mm-hmm. I mean, that's not as common today as it used to be, and it's cool. So
yeah, no, like I said, we're very fortunate to be friends with some landowners that own a couple, several nice farms that they allow us to access, and like you said, it's something. It takes work. We're real close friends with them, but we try to take care of them as best we can too, and if there needs to be a project done around the farm, we take care of it, and just doing things like that to make sure that they know how much we appreciate them allowing us to use that ground. Yeah. So it's.
Yeah. So let's jump forward into what it is that you're doing right now as a financial officer. Let's say new person to the land market, somebody who's put themselves in a financial position where they feel ready to make a purchase. They maybe call me about a piece of property or something, and one of my first questions is going to be like, have you talked with anybody about lending yet? If you're not a cash buyer, I mean, how are we coming up with the rest of the funds? And then quickly going to, look for somebody like you to hand them to and say, hey, you need to talk to Garrett. You need to answer his questions. Walk me through the process. If I'm a new buyer and I call you and say, hey, Garrett, I want to buy this 40 that just came up for sale down the road from me. Where do we go?
So in a situation like that, if it's, let's just say it's one of your listings, they'll identify the piece of property that they're looking at. I'll probably take a look at the listing and get myself familiar with it if I haven't already. Just try to figure out what kind of income could potentially be on that farm. If there's some CRP or ag income, again, the size of it, what the purchase, what you're asking for it, what they think they're going to have to give to get it bought. Then I'll start asking them some questions about what they do, what kind of income they have, where they're at, from a cash standpoint, as far as what they think they could handle putting down for a down payment. And then again, depending on what kind of farm it is, if it's got a lot of tillable acres on it, it's like, am I dealing with a farmer here? Is this somebody that's looking at it as more of an investment piece? Is it more of a recreational piece that they're going to have somebody else cash rent out? And then just some general, verifying their identity and things of that nature. Ask some general questions on that. And then as we move through the process, and if they decide they want to see if I can get them approved to purchase this farm, then we'll start talking about what financials I'll need them to provide me before I can move forward.
Some tax returns and some things like
typically at a minimum, what I'm going to require is 3 years of tax returns. So a lot of times, people might have those printed off and handy. They can run them in, we can scan them in, but a lot of times what works best is just reaching out to your tax preparer and having them email those over to me. And then I'm going to ask for a balance sheet as well. And so that's just going to be it. On one side of the balance sheet, it's going to be a column that lists out all of your assets. On the other side, it's going to list out all the liabilities, so anything that you owe on those assets. And really,
car notes, student loans.
That's right.
All that kind of stuff.
Yeah, so your assets, checking accounts, savings accounts, any sort of retirement accounts. If you own your home, if you already own some ground, things of that nature would be on the asset side. Vehicles. Then the other side, student loans, credit card debt, potentially, vehicle loans, home mortgage loan, anything like that.
Yeah.
So, and that's going to be really about it for what I'm going to require, at least initially.
You're not doing a full credit check or anything on them at that point?
Nope, not at this point. We're not going to pull your credit until we get a little bit further along in the process. At that point, we're just kind of building some history, getting familiar with each other, and it gives me an opportunity to kind of feel them out. It gives them an opportunity to feel me out too, and see if I'm the type of guy they might want to work with, and if we've got some things that we can offer them that they think would be beneficial for their
well, so talk to me about that. What are some of the things that you guys do offer? Like, what are your different loan products, or tell me what do you spend most of your time working on as far as lending goes?
The majority of our business is going to be the real estate notes, but we do typically, who I'm working with, I work with a lot of producers, people who are actual farmers, and they're operating their own farms or ranches. Do work with some investor type clients too, so we've got some of that. But a lot of it's going to be with the producers. So with that, we can do equipment loans, operating loans, if they're wanting to put up a shed, anything that has to do with their farming operation, I'm able to finance for them.
Gotcha.
So with that, if I'm going to work with them, they do have to have some farm income.
Right. It
So
has
if
to be
you're
agricultural, at least at some degree.
You got to have some Schedule F income, or you've got to have some land that you own that maybe you're renting it out, maybe you're just a landlord, or like I said, an investor or something.
If you owned a farm that has CRP income, is that going to count?
Yep, I can make that work.
Okay.
So it just depends. There's a little bit of a gray area there, and us as an organization, Compeer, we're going to be able to work with really just about anybody. It's just a matter of if it's going to be in my court, or if I need to shift it over to more of our consumer lending department.
So you kind of have specialists.
Yeah, we've got some specialists for if it's somebody that just owns a house in town and they want to buy 20 acres of nothing but woods. That's probably going to be something that I'm not going to be able to make them a loan. They've got no ag income. They're not looking for that. I need to shift them over to work with our loan officer, Mary Grace, and she does our consumer lending.
Yep, Mary's great. Mary Grace has done a good job for a
You've
number of
worked
our
with her
clients.
too.
Yeah.
Yeah. So a lot of these situations, it's just going to be dependent on the individual and dependent on the farm that they're buying at.
Okay.
If it's going to stay with me or go
Yeah.
over to
If it's
her.
residential or consumer type loans, it goes to a different department.
That's right.
Okay.
Yep.
Yeah.
Yep. But if it's more ag driven, it stays with me.
Yeah. Okay.
So
let's go back to our example. Let's say there's an 80-acre piece just down the road from them. They're pretty excited about it. They call you. You walk them through the initial process. What do the numbers look like today?
yeah. So it's big numbers as you know. I mean, it's
Bigger than it used to be.
It is, yeah. Land's really appreciated a lot here. It's been a good investment, so it's been great if you've owned it. But if you're still waiting to try to get your first piece spot, it's some pretty staggering numbers when you first
If
start
you're
looking at
chasing it, you're running these days.
That's right. So yeah, I came up with some numbers here just on a hypothetical farm. That 80 acres, like you mentioned, looking at it at $7,500 an acre, that's going to be a $600,000 farm. In our part of the world, there are still quite a few 80-acre pieces that sell in that $7,000 to $8,000 an acre range, especially if it's it's not going to be your Class A, really good, strong tillable ground,
Right.
But
Some
it's going to be a
mixed
mixed
ground or
piece,
more marginal
Yeah,
tillable.
something that might be 50-60% tillable, and then the rest of it timber or some CRP, things of that nature. Maybe it's some rougher, some
Pasture
some
ground.
pasture on it, things like that. But that's still really doable. But yeah, so you're looking at a $600,000 purchase on a loan of that size. For a purchase of that size, the maximum I would be able to loan you would be 75% of that. So
Okay,
it would
25%
require
down payment.
Yep, 25% down payment. So for that, you'd be looking at $150,000 down, and then we'd be able to finance the $450,000.
And that 150,000 down, that could be cash, or it could also maybe be equity or something. Is that right?
That's right. So it can either
Leverage another asset.
you can leverage another asset. So for me, again, if you own another piece of farm, if you got another farm or something like that, I would be able to use it as long as it's not already pledged for another note.
Right. If there's enough collateral to be
If
had.
there's enough collateral there. So yeah, there's different ways we could go about it. Again, every different situation is it's going to vary from person to person and from situation to situation. But yeah, we can come up with different ways to get that 150,000.
Okay. So what do the rest of the numbers look like then?
We offer some long-term fixed rates, which is unique to us. So Compeer Financial, we are an association within the Farm Credit System. So how we are funded and how we get our money to make loans is a little bit different from your typical community banks or credit unions.
Yep.
So we can offer truly long-term fixed. This is going to be consistent with a lot of your clients that are looking to get their first farm. They're probably homeowners, a lot of them, so they're familiar with those 15-year fixed or 30-year fixed home loans. Usually when you're buying ground, and a lot of times that's not usually how it works if you're going with a local bank or, like I said, one of these other institutions. But we do offer true 20-year fixed or 30-year fixed. So I just run down through some numbers here just to give people an idea what kind of
lay 'em on there.
what it would look like for monthly or annual payments. And again, $600,000 purchase. You got cash. You're going to put $150,000 down. You're going to borrow $450,000 on a 30-year note. Right now, we're looking at about 8% interest, and that's going to put you at an annual payment of around $40,000. And if you wanted to pay monthly, that'd be about $3,300 a month. So
Okay.
that's kind of what you'd have to be looking at if you wanted a 30-year fixed rate note.
Yeah.
If you wanted to go ahead and shorten that up a little bit and go with a 20-year fixed, it's going to save you some money on interest costs, and obviously you've got 10 less years of paying for that farm. It also drives equity into it faster. So then, maybe 5-10 years down the road, if you wanted to buy another piece, you could, capitalize on the equity that you've driven into the farm.
Yeah, they always say the hardest farm to buy is the first one.
I know it. Yep, getting that first one and get it working for you, and so that way you can take advantage of some of this appreciation that we've experienced here in recent years, because it's been pretty substantial.
Yeah.
So, but in that 20-year fixed, in that example, your interest rate's going to be a little bit cheaper, but not a whole lot. We'll say 7 3/4. Annual payment on that's going to be $45,000. So that's versus the 40 on the 30. So just an extra $5,000 a year. and
But
your
you're
monthly,
paying it off 10 years sooner.
and you're paying it off 10 years sooner.
Sorry, your monthly.
Yeah, monthly is going to be $3,700, and so your total interest that you're going to pay in that example is only $450,000. I say only, but it's compared to $738,000
Yeah.
on the 30 years. So it's almost $300,000 in
Right.
savings just in interest.
$5K extra a year in payments,
Yep.
but it saves you hundreds of thousands in
That's right.
interest over the 10 years. Yeah.
Yep. And of course, that's just if you make just the scheduled build payments every single month or every single year. over
Most of
the
these
course
notes
both
have
those
any
loans.
prepayment penalties?
So we've got some different options. If you're not going to be in a hurry to make extra principal payments right out of the gate, we do have some partial lockouts, we call them, where you're not able to make additional principal payments for the first 3 years. That's usually usually the duration that we use. We can
And those
do
first 3 years are usually going to be the hardest for people to make any additional payments on.
typically because they burn up all their cash with the down payment and trying to get it bought in the first place. So, and it just depends on the market and the interest rate environment at the time. But right now that might save you a half point. So
Okay.
it can be pretty significant savings. And then after those 3 years are up, then you're able to start paying down on it more aggressively if you want to.
Yeah.
So, and then with these long-term fixed rates, that's where you start it. That's what I tell people is we're setting the ceiling on what your rate is going to be. And then over time, if the interest rate market allows, we'll continue to work that down. We'll reprice and lower the.
Yeah.
the
And there's
rate on
usually a
that.
window like a year or two. I mean, at what period of time are you able to refinance typically?
So if it's
to reprice the percentage, the
Yep.
interest rate.
So it's after a year.
Okay.
We're kind of locked into it for a year. And all these things, there's always a way out of it if you want to, but there's going to be a fee involved. But after 12 months of having the loan, if interest rates drop, we'll be able to
Just
to
call
go
you up
back
and be
in.
like, Garrett, interest is
Yep.
down to 6.5, man.
Yeah, so that's what I would do. Is like call you up, Chase. Interest is down to
Right.
6.5.
And you might call them.
That's
I mean, right?
That's
You're-
that's how it's typically gonna look.
Okay.
Gonna look.
Yeah.
Some people are really in the know and they're watching the interest rate market and they're like, hey, can I
Can I save some money?
refinance this? Can I work it down? And so when we do these repricings, it's not like your traditional refinance on a house. We're not going to require a new appraisal. There's not going to be all this title work fees or extra closing fees. It will cost you a little bit, but typically I'll say, Chase, we can get you 1.5% lower. It's going to cost you this much. You're going to get that money back in 4 months.
Right.
And then from that point forward, you're going to be money ahead.
Right.
For
You're
the rest
saving a
of-
bundle
It's a no-brainer.
every month after that.
Yeah. I mean, I've never had, most people, they jump on the opportunity.
Sure.
So it's a good thing. And there's no limits to how many times you can do that.
Yeah.
And we just keep working it down over time.
Yeah.
And so, and you don't even have to stay with the same product. We do, outside of these fixed rate options, we do offer adjustable rate loans as well. So, maybe the first year, I've had a lot of guys here recently with interest rates where they're at, they've been taking a lot of 3-year adjustables. And so what that means is that the rate is only fixed for the first 3 years of the loan.
Right.
The
What rate are
overall-
those at roughly today?
On something like that, maybe down closer to 7%
Okay.
or,
Low sevens?
upper sixes.
Oh, okay.
I could still probably get 6.95 today, somewhere in there on a
Right.
3-year
And that
adjustable.
fluctuates, but by the time this,
It does. Yeah.
somebody watches this a couple months from now, the rates are going to be different. But
Absolutely.
just as we talk through some numbers, it's helpful to know where things are today.
It might save you 1% to go with a 3-year adjustable versus a 30-year fixed. So if that's worth it to you and you're willing to give up that long-term rate security, if you're in the camp that you believe rates are going to soften up here in the next 3 years anyhow, then why would you want to pay, the extra
Yeah.
the extra percent, for the next 3 years and then just end up in the
Right.
same place anyhow?
And luckily, you guys have a crystal ball in your office too, like I do.
Oh,
Because
yeah. Wouldn't that be nice?
Everybody that calls you and says,
Yeah.
"What's the market going to be like a year from now?" Like,
Yeah, it's hard to say. I mean,
I have an opinion,
Sure.
but take it with a grain of salt. In
That's
some
just
cases.
it.
Things
Yeah.
have been a little wacky the last few years, last 4 or 5 years. So it's kind of
there's been a lot of volatility in it.
yeah. But that's not to say like that we have no idea. Like I would like to think that I have an idea, but there's absolutely no guarantees, are there?
No, there's no guarantees with anything.
Yeah.
But yeah, so they could switch. They could be on that 3-year adjustable, and then at the end of those 3 years, or 2 years down the road, when I call them up because rates have shifted a little bit, if at that point they want to switch and go fix it for the rest of the life of the loan, say there's 25 years left on that loan, we can just fix it for the next 25 years. You're not committed and married to taking the 3-year adjustables every 3 years
Right on.
for the whole life of the loan.
Okay. Well, let me ask you this. Let's say I get into a good loan on a farm, and then I get an opportunity to buy another farm, and I want to leapfrog. I want to sell the one that I've got and buy this other one. But gosh, my interest rate was only 4.75% on the other farm. And if I buy another one today and I have a loan, it's going to be like 8.1 or 8.25 or something. So can you carry a mortgage forward from the first farm purchase into the second farm? Can I keep my same loan?
Yeah, so that's a really great question, and it is kind of unique to us, but we do have the ability to do that, where you'll be able to keep that loan, keep the same terms, keep that interest rate, and we call that a collateral substitution. So really what we're going to do is we're just going to release the farm that you're selling, and then we're going to take the new piece that you're purchasing and use it for collateral. And as long as it's worth enough to still be able to support that loan from a collateral standpoint, the note just stays, it continues on just business as usual. It doesn't change anything.
That's a game changer.
It is. I mean, and that's been huge. I'm working with a guy right now that's what he's looking at doing. He's got an opportunity. He owns 60 acres and he's got a loan with us on it. He's got an opportunity to buy 80 acres right close to home. He's like, what do I do? I don't want to leave, I don't want to walk away from this really good rate.
Right.
I said, well, you don't have to. We'll just do this collateral swap and you'll be able to keep that loan. And he's like, you guys do that? Yeah.
More people need to hear about that.
Yeah, no, it's a really big deal, especially when we've seen, rates jump up like they have here.
We are at our lowest inventory point that we've been at in the real estate market in at least the last 4 years right now. And a lot of that is because people locked into these just outrageously low interest rates, over the last few years. And so if they bought a house or farm or whatever, something at, 3% or 4, even 4 upper 4s, and they're looking at, gosh, I kind of want to move. I kind of want to buy this other farm, but I don't feel like I can, because if I sell this one, I'm going to get burned on interest. And knowing that there's something like that available to them where, if it frees up a portion of the real estate market, because right now we just have so many people out there that want to make a move or want to trade a different piece of ground, and they're afraid to because they don't think they have any flexibility, and they're going to get a brand new mortgage that they're not going to be as happy with.
Right. Yeah. So that's a really big deal, and it allows people to hang on to those good rates and keep those same terms. And in the event that they need a little bit more money to get flush with what they're buying, then we can just make them another note using the new piece of ground as collateral. And
right. For a smaller portion or something.
For a smaller portion, and that's going to be at today's rate.
Yeah.
But at least they're not taking the whole entire thing at where interest rates are at today.
Right. Oh,
so,
awesome.
Yeah, it makes a big difference. Something else kind of along those lines that we do is loan assumptions. So in the event that you get a loan and your kid wants to take it over or something, you can let them assume the note and you can walk away from it. We can release you of liability as long as they have the ability to service the loan and make the payments. Got a situation right now where I'm working with somebody who's trying to buy a farm off of one of their friends.
Family, okay.
It's a real close friend in this situation, and this guy has some loans with us, and he's like, well, what is there any way that he's got these good rates? Can I take advantage of that?
Can I buy his loan?
Yeah, and he can. He's going to be able to assume that loan, and we'll be able to release the other individual off of it. And they're doing this all privately. Well, that makes a big difference if he's able to get a portion of the financing at that cheaper rate, somewhere in the 4s, versus having to get it all at today's 7.5, 8 plus.
Wow, very cool. Very cool.
Yeah, there's some unique tools there that people can take advantage of that really can save them a lot of money.
Yeah. Well, so walk me through some of the other stuff. Let's talk hypothetical 80 again. And you said maybe 60% or something tillable ground on it. And if they wanted to put that on a 20-year note today, their annual payment might be like $45,000-ish.
Yep.
How's somebody pay for that? The average person who just hears these numbers and is like, $45,000, holy cow. What is a farm these days out there in this area with, let's say, 50 acres of tillable ground? What kind of income can somebody make farming that kind of ground? And what are some ways that people are cash flowing those types of properties?
So it's tough, as you know. I mean, these properties don't typically cash flow themselves. I mean, almost never. If they did, everybody and their brother would be buying it.
Everybody would own.
So you're going to have to feed it from somewhere else. Either that's going to be from other ground that you already own to help, make those payments and make it work, or you're going to have to feed it from some off-farm income. Typically, like a lot of the folks that you send over my way, they're usually wage earners. They don't, maybe farm full time, and but they work. Maybe their wife works, and they're going to have to use a portion of that income to help supplement the farm and make those payments.
Yeah, if you could just buy a farm and it made enough money that it paid all of its own payments, it would basically be free land.
That's right.
Everybody would have it.
Yeah.
And so that, the reason that most people don't is either the biggest hurdle, the first one, is the down payment. For most folks getting into their first piece of ground, it's just coming up with enough savings that they're a player, that they can finally get in the game with a land purchase. The next step though is just knowing gosh, $45,000 a year, that's just seems really overwhelming to most folks. So where does that money come from? And obviously we understand now that not all of it is going to come off of the farm, but if you had 50 acres or so of tillable ground, cash rents these days anywhere from $250 to $400 plus an acre in this area. So let's say it was 300.
That's 15 grand, right there. So that
knocks a third off.
Yep. That's a third of it right there. Maybe there's, some timber that could be harvested off the wooded portion of the farm. Maybe there's some CRP acres. But it's definitely not going to cash flow itself.
Right.
There have been some unique situations where farms have come really close. I know there's a gentleman that you and I worked with, and he bought some ground that had some really strong CRP payments, and it's not going to be guaranteed forever, but at least for the next handful of years, 6-7 years, I think was how long the contract was going in that scenario. But it just about cash flowed.
Right. Yeah. Put the money down on it at that point.
You just got to come up with a down payment, and it'll carry itself. But that's few and far between. Typically, you're going to have to use some off-farm income or, other ground that you own to help offset that payment and make it work.
Yeah. What are some other ways? Are you guys working to help producers make their operations just a little bit more profitable overall? You guys do other sorts of financing, other forms of loans. You're helping people finance farm improvements, buildings, maybe equipment or some of those things, right? But when you sit down with somebody and you're kind of helping them look through their numbers, what are other ways that that a financial officer works or helps with a producer to sure up their numbers?
A lot of these guys, we're meeting with them every single year. A lot of our guys that we have our operating notes with, the producers that that we're working with really consistently, they're in quite a bit, and we'll sit down and we'll go over their balance sheet at the end of every year. We'll go over their taxes. They might have some of those things prepared elsewhere, but we'll sit down and have a conversation, just kind of see where they're at, where they're coming from, how they look 5 years ago, how they look last year, kind of what their goals are for going forward. And if we start to see where there's any potential issues or things are getting tight in one area, might make some suggestions to maybe help correct that a little bit. We've also got a really good credit team on staff. We'll have them take a look at different things for our clients, and they'll be able to produce some information that we can use to educate them and be able to help them out. It's things that are specific to their operation.
So you're looking through some of their books year to year to year to kind of watching for trends and seeing are their margins getting better?
Right.
Are they slowly getting enveloped in too much debt, or are we?
Right. So there's a number of different ratios that we're going to be keeping tabs on.
Kind of like a doctor checkup, though.
Kind of like a doctor checkup. Yeah. Just making sure everything's looking good and verifying that there's not any potential issues that could be creeping up. We just want to make sure that we're all on the same page, and if we can see a potential problem 2-3 years before it is a problem, that's going to go a long ways to correcting it. And so where it's not when you find out about it later, just like in your doctor example, that's when it becomes more painful and harder to overcome. But if you do some preventative maintenance along the way,
before there's a heart attack,
that you can keep a lot of that from it won't be too challenging for you then.
Yeah, gotcha. So shifting gears a little bit on you, we touched early on about some land stewardship stuff. I would love to just get your thoughts. Let people know who Garrett Feik is with regards to how you view private land ownership, what you think of it, why you think it's important, what you think what are some of the threats that the future generations face with regards to like private land ownership. I mean, this is shifting gears from talking about borrowing money to buy a piece of ground, but you and I, we're on the same wavelength about a lot of things. And I know you have a lot of the same values when it comes to land ownership that I do. And I think as your career has like developed into helping people become landowners or expand their land ownership, I'm just really curious about like, what are your thoughts about what are the biggest threats today that landowners facing, or that land ownership in the United States that we're kind of looking at?
Yeah, some big questions there, but
I'm trying.
No, I believe in land ownership. Obviously, I think it's an important part of our country. It's an important part of these rural communities. There's a lot of wealth that's just tied up in the dirt around here, you know, and it's we've got a lot of wealthy people that live in these rural communities and are able to make good livings too, just because of the land that they're able to own. Yeah, I mean, we're in a part of the world where our tillable acres are very productive, and you know, we're able to do well, and they're worth a lot of money. But it is going to be challenging for future generations to continue buying ground when we're looking at prices that we are today. We've seen a lot of good Class A ground sell for $20,000 plus an acre in this area, but as we talked about earlier in our example, there still are some opportunities out there to buy ground for a more reasonable price. So there are some opportunities out there. There's programs with the FSA, and I know you and Jackie have talked about that a little bit before. We might dive into it a little bit.
Yeah, later, definitely want to hear more about how you guys get involved with that.
There's some opportunities there, and that's all good, but it is challenging, and I'm in the camp that's still waiting to buy my first piece. And I remember telling you 10 years ago that, you know, my goal was to have a piece of ground bought by the time I'm 30. Well, I turned 30 next month. I don't have one bought. I don't think I'm going to get one bought here in the next couple of weeks. So, you know, yeah, just kind of chasing it. It's challenging. Yeah,
goals are good, but also as you get closer and closer to making that goal a reality, you're a lot wiser today than you were at 20.
Sure.
And so, not that you maybe couldn't have bought a farm by now, but as you got wiser and wiser, you started to probably learn that finding the right piece of property and the right buying opportunity is a whole lot more important than just making sure that you check that box before you hit 30.
Right. Yeah. So it is concerning, you know, in certain pockets in the U.S. or, you know, stronger markets and even harder for an average person to buy ground than others. But it's going to be tough. We're seeing a lot of these landowners that already own quite a few acres, they continue to get bigger and bigger because, as you mentioned earlier, the first one's usually the hardest one to get bought. Yeah. And then, you know, some of these guys own thousands of acres. Well, and they're the ones that are consistently buying farms.
Right. And as all of those acres, it's compounding interest. So all of those acres continue to appreciate at record high rates. They've gained a tremendous amount of wealth over a relatively short period of time. I mean, none of that happened overnight, but just in the last 5 years, the value of those farms has swelled, where if another piece comes up for sale and they want to add it, it's pretty easy for them to make a phone call or two, pull a little bit of money out of some of the assets that they're holding on to and make it happen, where somebody new trying to get in the game or a younger person who doesn't have that kind of collateral behind them yet, it is a lot tougher for them to make it happen.
It is. And, you know, and it's great for those people to have the ability to do that. They've put in the hard work to own the ground that they have. And, you know, they're just, you know, taking advantage of being able to cash in on all the hard work that they put in over the years. But for the new guy, it can be pretty tough, especially if, you know, if mom and dad don't own some ground, or grandma and grandpa doesn't own a farm that they would maybe be willing to pledge for collateral. I mean, you know, in our example, how do you save up for a $150,000 down payment? You know, it's tough. It takes a lot of years. A lot of people will never get to that point. And, you know, that's a $600,000 farm. It doesn't have to be that. You know, you have to adjust it depending on what you're looking for and what you're going to be able to afford. But even if you take that cut it in half, now you're 75,000.
Mm-hmm.
That's still a tremendous amount of money to be able to save up for. It's going to take years, and I mean, it's you got to really want it. You got to really want it.
Yep, no doubt.
But,
So talking about some of the larger landowners who are buying these 20,000+ an acre type parcels, I get asked the question all the time, and I'm sure people probably bring it up to you too. They'll say, how does anybody make that pencil? That just doesn't pencil. How can you spend that much on it to grow corn and soybeans? And my understanding of it, or how I explain it back to them, is that most of those landowners who are buying those tracts, it's a high quality farm. It's a long-term, not just long-term hold, but multi-generational investment. Most of the time, they're just spreading. If they do have some debt that they're going to take on that specific piece of ground, they spread that debt out over all of their acres. And is that 180? If they spent $22,000 or $5,000 an acre, is it going to be profitable anytime soon? No, it's not. But that's really not the point. The point is that they're trying to grow their holdings because they probably understand that long term it's only going to get more difficult for them to advance their holdings, or if they have an opportunity to buy a good quality farm that's within their network, that's logistically close to the rest of their operation. Those opportunities do not come along very often. When they do, you kind of have to just make it happen and just absorb it into the rest of your operation. And you're maybe not buying it for your lifetime for it to be a profitable farm, but for your kids or your kids' kids.
Sure. Yeah, it's usually a once in a lifetime opportunity, if that. A lot of these guys have been looking across the road or across the fence at the same 80 their whole life, just drooling, waiting on the
driving
opportunity.
Driving by it or farming next to it.
Yep. And then when the day comes that it's for sale and it's the opportunity to get it bought, they'll pay, in a lot of instances about whatever it'll take to own it.
Yeah.
And I think, in a lot of situations, people underestimate just how much cash is out there across the countryside. A lot of times, especially in these higher interest rate environments, over the last year or two, cash has been my number one competitor. When I'm not making loans, it's because people
they're still buying.
They're buying farms and they don't need me. They're just using cash. And I know that can be almost hard to believe when you're talking, multi-million-dollar purchases, but
sure,
that people are out there that have the ability to do that.
Yeah, and there are plenty of them that are sitting on a lot of cash, but then there are a lot of landowners who are land rich and cash poor.
Absolutely.
Don't make a lot of money, but they have a tremendous amount of wealth to their name when you consider the farmland assets that they hold. But it's just become that kind of business. But let's go back to somebody young who's just getting into it, and they've met with you, they've talked with you. Maybe they're already renting some ground, or they have some cows or something, and they're interested in going the route of one of these beginning farmer loans.
Yeah. So
introduce that to us.
Somebody like that's already been farming for a few years, like you say, have some livestock, or
they got Schedule F.
Hay. They've got Schedule F income. Usually I know just from working with the Farm Service Agency that a big part of their eligibility requirements is going to have 3 years of Schedule F income.
Mm-hmm.
So if they've got that, or if they're even just a year or two into it, then that's going to be an avenue that I would identify for them to go down.
And how does that work? You guys kind of partner.
Yeah, so we'll
FSA,
do a
right?
participation loan with the FSA. We do those a lot. That's another thing with Compeer Financial. We're a preferred lender with FSA, so they like working with us. It makes it a little bit more of a seamless process compared to maybe some of the other institutions that you could work with for getting the other part of the loan. So in those situations, the two loans that I see the most often as far as purchasing real estate is going to be their true beginning first-time farm buyer loan. That's going to require a 5% down payment from the purchaser, and then the FSA is going to finance 45% of it, and then us or another lender would finance the remaining 50%.
Yeah.
So
the first question that comes up in that is people are like, well, wait, how come I only have to put down 5% if I go that route as opposed to 25% if it's all with you? And the reason is that the FSA is guaranteeing that 45%, right?
That's right. So they're guaranteeing they've got their 45%, and they're guaranteeing 90% of our 50%.
Okay.
If that makes sense.
Right.
So
Lessens the risk to
Yeah.
your institution substantially.
Yep, $200,000 loan. You put down, the buyer puts down 10,000. FSA finances 90,000. We finance 100,000, but they're guaranteeing 90,000 of our 100,000.
Right.
So and we get to be in a first lien position on the farm, and so that just means if everything goes bad and the individual isn't able to continue making the payments, they got to walk away from it. We are made whole first. You know, if we need to take that farm back, or in an unfortunate situation like that, we're going to be taken care of first.
So those are great loans for you guys. Also,
Yep.
fantastic loans for the borrower.
They're great loans for the
the
borrower
consumer.
because you've only got to come up with 5% down, and
Right.
the
And
FSA
interest
has,
rates.
fantastic terms on that part of it. So I mean, there's I know at least the last one I did was like 1.5%. So you'd have to check with your local FSA loan officer to see where they're at right now for sure. But
Their
yeah, I
rates
mean,
will vary a little bit, not
they're
quite as
not
up
as
and down
much.
as the
No.
outside market, but
Yeah, and I still think on that down payment loan, they're at 1.5% on
Yeah.
their portion, and then the half with us will be consistent with wherever the market's at.
but then so even if that was like 8% at a given time or whatever,
Yeah.
I mean when you're
And
averaging
your blended
amount,
rate,
Yeah.
that's still really cheap.
yeah, it is. Yeah, gets to be very, very competitive.
So then they do have another option out there that's just a 50-50 loan where the borrower doesn't have to put anything down, and then we'll finance 50% of it. FSA will finance 50% of it. So
And that's just a little bit higher interest rate probably on the
It's-
FSA part.
it's a higher interest rate on the FSA part. They can stretch those terms out a little bit longer though on that option. They can go as far out as 40 years potentially, and then we could do 30 on our portion
To get
of
the
it.
payments down for
To get the
that beginning
payments
person
down.
to get going.
That's right. So, but yeah, usually the kicker with the FSA is you do have to be a producer, and you have to have been farming for at least 3 years. And for that first time farm buyer, like you got to have been farming for 3 years, but no more than 10.
Yeah.
Uh,
You got
the
a 7-year
50
window to
You got a
play
7-year
your
window.
cards.
Yep. And then there's some limits in there. They'll only, at this point, they'll only loan you for either of those programs up to $600,000. But still, that's a pretty large purchase because if they're loaning you $600,000, that means you got another $600,000 with us or somebody else. So
Right. So you
That's
can
$1.2 million.
potentially get up to a $1.2 million. And that's as big a purchase as most beginning farmer ranchers are ready to make.
right. And if you do it, say if it's year 3 or 4 of your farming operation, your farming career, if you get that paid down a little bit over the next few years, or there's still some room to tap into that 600,000, you know, you can get multiple FSA loans.
Yeah.
You're just going to be limited by that dollar amount
Okay.
that you can borrow from them. But
Yeah.
fantastic programs. Definitely, if you're eligible, you got to look into it. There's some tremendous savings to be realized there.
Now, do you know if those loans can be transferred from one property to the next?
That I can't answer for sure.
Yeah.
You know, you'd have to talk with
FSA.
your FSA loan officer, but
I'm
probably
I don't-
not.
Yeah, I don't think
Yeah.
they can.
I
But
don't
I just
think they
wondered if you
can.
had heard otherwise anywhere. But, you know, because that's the one thing about when you're in that window that you've been in it for more than 3 years, but you're still under the 10, you got that window of time where you're starting to shop pretty hard and look for a good buying opportunity. You're looking for the right piece that, you know, that you should jump into. I generally tell people like that beginning farm, that first farm purchase that you make, that first piece of land, don't feel like you're married to it because, you know, you may very well a few years down the road decide to trade up, or when you're in your younger years, you're more likely to move, you know, and relocate than you are if you were already in your mid 40s, mid 50s, you know, a little bit older and, you know, and been, you're a little bit, your tent stakes have already been driven in the ground a little deeper
Right.
type thing. But I think when you use an FSA loan, you better be willing to hold on to that piece for a while, because I think when you do sell that one, you lose the opportunity to use that same loan program again. And I don't think you can take those loans with you. But I'd be
No.
curious if somebody knows more about that. I'd love it if they jump in the comments and explain it to us, or give us a little bit more info on that.
Yeah, you definitely wouldn't want to walk away from 1.5% interest on,
That'd be
you know,
hard.
or 3, you know, 2.5, 3.5, wherever they're at on some of
Right.
those other
The,
programs. But
the big advantage of that is over time. That's really where you realize, you know, how much savings there is there. So the longer you hold that piece of property at super cheap interest while it's appreciating, the better off you are.
yeah, and then it helps you preserve some cash too. You know, that you don't have to put that big down payment down right out of the gate. So, and that's really important to a lot of these young producers. One of the things that we watch really, really closely is working capital. So that's just going to be the difference between your current assets and your current liabilities.
Right.
And when we start to see that shrink up, if it gets towards more one-to-one, you know, we point it out and say, hey, you know, this is something we need to try to work on, and we need a little bit more cushion there. So, you know, a lot of times for these young guys, they don't have a whole lot of working capital.
Right.
They definitely don't want to burn it all up to buy this farm.
No, and
so it helps preserve that, and that keeps them a lot more comfortable when we go through some trying times like we might have here the next couple of years.
Sure. Yep. And I think a lot of people, if you know very many farmers, you generally know them as being pretty conservative people. They can be a little bit tight with their money. They can be, you know, just because they have to become very fiscally savvy if they're going to be successful long term, or they were raised by very frugal, savvy people who didn't spend excessively and that sort of thing. So you're like, well, those farmers are pretty tight with their dollar. They really hold on to every nickel and that sort of thing. But when people who aren't in the farming industry or aren't around a lot of that, they hear those things and they think, well, that's just how all farmers are. On the flip side of the coin, farmers are also risk takers.
Oh, absolutely.
Because you couldn't farm for a living and not be able to stomach some adversity and be willing to know that, like, hey, you put all the chips on the table this year and you're just really hoping and praying that God blesses you with good weather and an abundant crop, because you're going to need it. You know, there's times where the market is just not favorable for you and you're just kind of like, gosh, you know, corn prices kind of suck right now, or, you know, cattle prices really took a big hit this spring and we're getting ready to sell 100 feeder calves. And, you know, so you're kind of at the mercy of all that stuff all the time. And so for you to farm or ranch for a living and be in the business, like, you have to be a little bit of a risk taker. And so I think it's great to hear, like, you guys are meeting with people, looking through their books, and on one hand, it kind of sounds like, well, of course the banker is going to want to look through it and just make sure, like, oh, we need a little bit more margin here because we don't like the amount of risk that you're taking and whatever. But on the other hand, it's like your first obligation is to help that customer. I mean, you're doing those things to help, you know, somebody else looking over things for them and saying, like, I know you could talk yourself into doing this because you feel like you need to be aggressive, or because, you know, you're willing to take some risks, but there's a check and a balance too, where when you're meeting with them and you're kind of in their ear and kind of saying, hey, I need to coach you a little bit on this. I'm a little concerned, you know, how this went last year and this year. If we have a bad year next year, you're going to not be in good shape, and we need to really look at what we can do to prevent that, right?
Exactly. Yep. Nope. That's exactly how a lot of those conversations go. And they're pretty frugal for the most part, but that's because they've been through challenging times before, and they know that they need to pinch those pennies even during the good times to be able to, you know, make it through the challenging years. Because agriculture is just like anything else; it's very cyclical. It's up and down. You've got strong commodity prices, good yields sometimes, and then you got years where it's, you know, prices aren't so good, maybe yields aren't so good. You got some other challenges with input prices. Just what it costs to put an acre of corn in the ground today is, you know, these guys are dealing with they're taking on a lot of risk, you know, before they even get a crop in the ground. They got a lot invested into it. So there's a lot to be thinking about for these guys and marketing their crop. You know, this last year at this time we had $6, $6.25 corn. Now it's down. We're looking at $4.50 corn. So things are they change a lot. You know, they change tremendously, and probably more so in ag than a lot of other industries.
Oh, for sure. And everybody else's, you know, biggest concern in the world is just inflation. And the farmer also has to worry about inflation. You know, the cost of fertilizer, cost of diesel, cost of everything, you know, keeps going up and up and up. But then also the price of their commodity that they sell, they have so little control over it.
Yeah, they're just a price taker.
Yeah.
You know, for the most part on that. They've got a little bit of, you know, ability to price it, market it differently throughout the year, and depends on, you know, what their storage situation is.
Do the best they can.
They do the best they can, but they don't have that crystal ball that we joked about either, you know. So last year was a big year where it changed a lot from where prices were at in the spring versus where they're at in the fall. Guys that priced it early, they ended up doing pretty well. Guys that didn't price it until they took it out of the field, it was a challenging year. 2023, we had really good yields, but prices went down tremendously, and we had huge input costs. So yeah, it just one of those things where they're taking on a risk every day, and it's constantly they're kind of gambling, and they're using their best judgment, of course,
and using your best judgment too.
Using our best judgment. A lot of other advisors, for these farmers, they work with a lot of different people. That's how I got, one guy I work with. He's, he kind of looks at it as like spokes on a wheel, around his operation. He's got his seed guy, he's got his fertilizer guy, chemical guy, crop insurance, loan officer. I mean, he's meeting with all these different people constantly because he knows he can't be an expert in every one of those areas. He knows quite a bit in all of them, but he needs specific guidance from each one of those areas. And he knows that they're all, he's got those guys or gals in his back pocket, and they're willing and able to help him out and help him make decisions that are going to have a positive impact on his farm, hopefully. So you got to use your resources. Yeah,
absolutely. And as with most things in life and business, a lot of your success can be determined by the circle of people that you surround yourself with.
Sure.
So if you find the people who can offer you that good wisdom and consultation, whatever, man, you got to hang on to them. Like, build really good relationships with those people. Garrett, you got any other thoughts or anything else that you would want to share specifically maybe to somebody who's looking at buying their first piece of property? What would you say to somebody who's calling you and says, Garrett, I'm thinking about buying a piece of land in the next year or two. Is it a good idea? I mean, I don't, what's your first reaction, and what do you tell those folks?
Yeah, I would say, that year or two ahead of time, that's a great place to be. I would definitely suggest planning ahead, getting your ducks in a row, kind of getting a grasp and an understanding of what it's going to take to get a piece bought earlier rather than later. You don't want to just have this opportunity thrusted upon you, and then now you're scrambling to try to figure out if you can get this bought while other people are already going in trying to make offers or whatever. You want to be prepared. So work ahead, be organized. If you don't have a lender that you're already working with, reach out to one, figure out what they need, start to build that relationship, get some history there. I usually always like to have people come in and sit down with me, or I'll go to the farm or their home, just have a conversation, just get to know each other so I know what they're looking for. They know what I'm looking for. They can start getting those financials in order, have those tax returns handy, or just get them to me so they're already on file, the balance sheet, put those together. And I would encourage them to just, keep trying to save some money where they can, and just be on the lookout for, the type of, farm that they're hoping to buy. And I send people your listings all the time, or if I hear about an opportunity that is potentially available privately, like when I know that I've got somebody that I'm working with or a prospect I'm working with that is looking to buy a farm, if I find out that one of those farms that checks all the boxes for what they're looking for comes up, I send it their way. So that's another reason why, as you're planning ahead, let these people, let me know what you're looking for, because we're talking about this stuff day in and day out.
Yeah.
This is our area of expertise, and we hear a lot of these opportunities, and as you know, a lot of these farms never even hit the market. Like, they never hit Land Guy's website.
No.
There's a lot of them that sell ahead of time.
Especially when the inventory is as low as it is today.
Yeah.
There's a lot of pent-up buyer demand, so pieces can move pretty fast, and there are a lot of pieces that sell quietly.
Yep.
So when you get yourself in a ready position, you need to be working with people who are really well plugged into the market and can help kind of get you in front of an opportunity.
Yeah, exactly. And we might learn throughout the conversation, or, looking over the course of a year or two, things come up in life, changes, and maybe you were looking at a 40 and now it's down to a 20, or, maybe you're like, well, I've been saving up a little bit more, maybe I can buy something a little bit bigger. But it never hurts to get the ball started, get the ball rolling earlier rather than later, and get organized and be prepared, because when an opportunity presents itself, you want to be able to jump on it.
Awesome. Well, really good advice. And Garrett, I really appreciate you again. Thanks so much for coming into the studio and recording with us here, helping people in our Buying Land series kind of get themselves ready, learning more about the financial steps. You gave some awesome detail, and I know what a fantastic person you are to work with. So highly recommend you to people. But you want to tell anybody how they could reach you, or what would be the best way to find you online?
Yeah, absolutely. So again, appreciate you having me on. It's good to be here, and really enjoyed the conversation. If people would like to reach out to me, best way to get a hold of me is probably my cell phone. That's what I'll give out. It's 309-574-9274. Again, my name's Garrett Feik. I'm with Compeer Financial. I'm in the Alito office. So you guys that use Google Maps or anything like that too, you can look us up on there, and
right on.
That'll provide a phone number you can reach out to.
Yep,
us at
and we'll
too,
link
so.
you. We'll link you in the bottom too, and on socials, so
Perfect.
that somebody can get plugged in with you or connect directly. And well, guys, thank you very much. Really appreciate the information again from Garrett. Garrett, we're gonna have you back in when we get towards hunting season, because you're one of my favorite guys to talk to when it comes time to sling arrows, and it'll be here before we know it. But next time, maybe we'll get into a little bit more hunting stories, and you can teach me everything I don't know about killing turkeys.
Yeah. Yeah, no, that sounds good. Just give me a shout and I'll be ready to do it again.
All right, brother. All right. Well, thanks a bunch, guys. Like and subscribe to join our tribe, and we'll catch you next time on Land Your Ground.